Hello and welcome to this Cornerstone Finance Group podcast brought to you by Business News Wales and sponsored by OSB Group. I'm Gemma Casey, editor of Business News Wales, and in this episode we're going to be looking at supporting home moves with regulated bridging. Delays in selling, broken chains and time-sensitive purchases are common challenges for home movers. So how can regulated bridging loans provide a flexible solution, allowing buyers to proceed with confidence? And how can advisors guide them through this short-term finance option? Well, with me to discuss this are Haydn Thomas, CEO of Cornerstone Finance Group, Ross Williams, Specialist Finance Account Manager with OSB Group, and Jodie Beck, Mortgage and Protection Broker at Mortgage Maison. Hi all, thanks for joining me.
Morning.
Hello.
Morning.
Now, Ross, before we get into this discussion, tell us about OSB Group.
OSB Group is one savings bank, and within one savings bank, there are a couple of different lenders. You've got Precise Mortgages, Kent Reliance, new lender form Soon Reliably will also fall under that, and Interbay as well. So the regulated bridging falls under Precise Mortgages. So most of what we talk about today will probably, under the regulated side, will fall under the Precise brand for it.
And tell us then, Ross, what is a regulated bridging loan?
Yeah, so a regulated bridging loan is where we are securing against a property that the customer either lives in currently as their residential property, or they intend to live in the future as their residential property.
And give us some examples of when and why clients might need one of these.
Yeah, so we've seen probably over the last 5 years, because of dreaded sort of COVID situation that we've had, we've seen a massive increase in what we would call chain break bridging. So chain break bridging is where you need to buy a property before you can sell your existing residential property. So I think because of the difficulties of either selling your property or people getting mortgages because of what's happened sort of over the last 5 or 6 years and the instability, what we've noticed a big surge in on regulated bridging is where people are struggling to sell their property out of buying their property, and they found their onward purchasing property that they want to buy and move into, but they just need that little bit more time to sell their current property. So that sort of scenario where a lender and a broker can really help a client on the regulated side is we can look to lend for them to purchase their onward purchasing property, whilst they then also have the ability of time to sell their existing property. So that gives them sort of a 12-month, so a year window to be able to purchase their property whilst they sell their existing one. So that, I would say, is probably the biggest sort of area for regulated bridging at the moment around the chain break. But we are also seeing, I guess, where, for example, Jodie is trying to arrange a mortgage for her client on their regulated property, but for whatever reason, the high street lender won't now lend on it because it's not in a habitable condition. That's where, as a bridging lender, we can step in, lend on the property whilst it's not habitable. The client gets it into a habitable condition, and then Jodie remortgages them with their high street lender. So there are lots of different scenarios, auction purchases, but I'd say those two are the main sort of areas that we're seeing the volume of regulated business at the moment.
Thanks, Ross. And Jodie, let's bring you in here. So, first of all, can you tell us a little bit about your business, Mortgage Maison?
I'm Jodie, the founder of Mortgage Maison Limited, and after a career in private banking with Coutts and NatWest Private Banking, a few years ago I moved into broking to offer more tailored and independent advice. And in 2024, I launched Mortgage Maison to do exactly that. And at Mortgage Maison, I help clients with all sorts of mortgages and protection planning, from first-time buyers to ultra high net worth clients with my high net worth background, really.
And Ross has spelled out there some scenarios where people might be accessing regulated bridging loans. And he's mentioned that some of those scenarios are increasing in volume due to economic climate and whatever. Is that a situation that you recognise?
Yeah, I think so. And for myself, I have clients that maybe don't want to rush selling their property. Especially with the high net worth clients, they might have a really unusual property that they don't want to reduce the price on to sell it quickly to maybe downsize to the next one. So, that's a real life scenario that I have day in, day out, and we'll maybe bridge the gap effectively so that they can go and buy their next property before rushing to sell their existing one. So, yeah, I'm seeing it more and more at the moment.
And can you tell us a little bit about eligibility for these regulated bridging loans? How does that work?
So eligibility depends on things like property type, intended use, equity, but the key is always the exit strategy. So how will the client repay the loan? So we need to assess, things like affordability under the FCA rules. But the key thing is that exit strategy must be clear. And we always ask if we have plan A and if that doesn't go to plan, what is plan B for the client?
Ross, from your point of view, how important is it that a mortgage broker is talking through the eligibility criteria and that exit strategy that Jodie mentions with their clients?
Yeah, for us, it's vital. I think for a regulated bridge, more than anything, the exit strategy is the key thing for us. So we'll always, the first thing we'll be talking to Jodie about when she presents a regulated case to us is all very well doing the bridge in the first instance, but how are we going to repay it in 12 months' time when it comes to the end of term? And for us, the most two common exit strategies are either going to be they're going to sell their existing property, and that's fine. So in that type of scenario, we would just then be relying on the valuer to come back to us with what the value of that property is, effectively what will it sell for on the open market. So that gives us the comfort that the property can be sold within the 12-month term. And then the other sort of scenario of exit is the refinance option, and that's where we're looking at proof of income. So a little bit like, I guess, doing a term mortgage, really. That what we want to know is, can Jodie obtain that exit refinance for the client within that 12-month term? And usually, I guess the key thing is that the exit doesn't need to be with us as a lender. There are multiple different lenders out there who can exit it. And that's where with most regulated bridging lenders, they're not really interested if we would refinance it, but we want Jodie to evidence that she can get a refinance with a high street lender or a specialist lender, whoever it may well be. And as soon as we've got a definitive answer on what the exit will be and we know it can be evidenced, then that's enough for us to look at the client and say they're eligible to look at the regulated bridge with us then.
And Ross, how do these loans work in practice? So let's assume that a client has gone to Jodie. Jodie's advised them that this is an option and they want to press ahead with it. We've talked there about their exit strategy, but what would that loan look like over the course of its lifetime for that client?
Yeah, so most lenders look at regulated bridging up to about 75% loan to value gross. So from the reason why we can highlight the gross stat, John, there is most lenders will deduct things like interest. So whereas obviously with a normal mortgage, you'll pay a monthly repayment. With a regulated bridge, the interest will actually be retained or rolled up, depending on what lender you use. What that means is that the customer doesn't pay a monthly repayment of the interest payment on the loan. So it's deducted from the loan at the source, and then so your net loan that you're getting is less than the interest and the fees involved in it. So the reason for that is because obviously the customer, whilst they're selling their property, is unlikely that most people could afford to pay their current mortgage and also the interest on a bridging facility. So it's designed to roll up or retain the interest so they don't make that monthly payment. And then from other things that are deducted from it will be the arrangement fee, which is typically 2%. And then that's deducted from the loan to give them their net loan. And as soon as we lend, that's when the broker then starts looking at the exit, or even before we lend, that's where they're looking at the exit strategy for it and where it needs to go.
And Jodie, how aware are your clients of this as an option? Is it something that there's good awareness out there amongst the general public of, or is this where mortgage brokers and mortgage advisors really come into their own?
I don't think many clients know, and maybe not all brokers know about bridging finance. Um, especially clients, they're not aware, and they're designed to be a fast and temporary solution, rather than a long-term plan, really. That yeah, bridging is where a broker's value really shines. Every case is different, and lenders vary wildly in appetite and process. And with bridging, you can't really just stick a case through an online system and hope for the best. The lender criteria vary so much, and getting it right means knowing the market and packaging the deal well. And as brokers, we add real value by matching the client's needs with the right lender quickly and accurately, because this is a fast solution. We guide the client through what is often a stressful period. There are evaluations, legals, forms, sometimes quite urgent deadlines. And that's where we step in. So not just as brokers, but as sort of project managers, and problem solvers for them. So we help structure the deal, explain the timeline, and keep everyone aligned, especially when things get pretty time sensitive.
Haydn, let's bring you in here. So Jodie has painted a really good picture there of the role of a broker when it comes to these products. Now, the Cornerstone network, as we know, has a lot of brokers that you support. How many of them would you say are advising clients on these products in the way that Jodie spells out there?
So out of the, I think 270 we're sitting at today, Gemma, and that number might change by the time this podcast comes out. But it's probably a rather concerning 10%, to be honest with you. So we've recently run some training, which Ross has been part of putting together for us, to launch a panel of lenders that we believe amongst them cover the majority of the market in terms of regulated bridging. And then we put a very simple application process together for the advisors to be able to use to access those lenders. We've got 30 to 35 of our advisors currently registered on that regulated bridging, and that for me is an area of concern. I think Jodie summed it up really well in terms of the difference between a traditional mortgage, which is these days is very, very digital led in terms of sourcing, finding the right deal. Yes, you have to give advice, and it's more than that, but a lot of it is done, I guess, through the tech, through the information provided by the companies. Bridging is more of a relationship piece. I think traditionally people who are aware of bridging probably view it as expensive and kind of last resort, but there are so many instances where it's essential in that chain. Downsizing, I think, is one of the biggest and most emerging areas. So if you can't sell your property quickly enough, but you want to downsize to a new build and you need to secure that new property. I know Ross and myself were in a conversation with one of our colleagues the other day, which was a 75-year-old lady looking to downsize, and she was interested in a £750,000 property on a new build, and was sort of declined by the local broker acting on behalf of the agents because of her age, because he couldn't find a mortgage for her. He failed to ask her the question, where was she living at the moment and how much was the house worth? And her existing property was worth 2.2 million. So bridging was an obvious and simple solution there. Luckily, somebody else picked it up, and she managed to get that deal done and get the house that she wanted. So I think it's about asking questions, and it's about having it in your toolkit as a mortgage advisor. And it probably plays into the difference between broker and advisor, which I know we talk about quite a lot at Cornerstone. So broking to me is a transactional phrase, is a one-off, and advising is a relationship phrase. And I think Jodie's in that advisor space, definitely, and those that are trying to access a wider range of options for their clients are in the advisor space and long-term relationship. And I think that's important. And for me, bridging will play a fundamental part of that. So we have a panel of 9 at the moment. We'll probably expand that to a few more lenders, and then we'll look to move some of our team who look after property investors into some non-regulated bridging later in the year as well.
And I know we're going to look at non-regulated bridging in the next episode. So, Haydn, you've identified there that there is a gap in knowledge amongst mortgage advisors when it comes to these products. Tell us a little bit about what Cornerstone can offer to mortgage advisors who are listening to this who think, do you know what, Jodie's made a really compelling case
Yep.
there for why I need to know more. What does Cornerstone offer?
So, I mean, we pulled together some pretty superb training, which Ross took part in along with colleagues from the other lenders on our panel. So, they're the experts, as you'll have found out already. Don't ask me any technical questions on regulated bridging. But the team pulled that together. We recorded that. We have it on our in-house portal. To get access to the regulated bridging panel, our brokers need to go through that training. So it's there, confirm they've been through it, understand it. And then we have a really, really simple process for registering. And, the podcasts like this, ongoing sessions that we hold inside Alive on a Friday for our teams, it's all about education and about support and about developing skills to become a broader advisor, and supporting our clients through the journeys. Because the more you can embed yourself with the client, the deeper the relationship gets, the longer it lasts, the more value you build in your own business as well. So that's kind of, it's part of that, really.
Thank you, Haydn. And I'm conscious of time, so I have one final question for Jodie and Ross. Jodie, I'll come to you first if I can. So we've talked there about why these products are so important and why they're being seen more and more. Hayden's given us a brilliant example of someone for whom accessing this product has been literally life-changing. And Jodie, you've explained to us why it's something advisors should have in their toolkit. So Jodie, what would your message be to advisors listening to this who think, I don't know much about this? Where would you suggest they start? Why would you say they need to know more about these products?
I'd encourage other brokers listening to really explore how bridging can fit into their advice process. And of course, lean on the support from groups like Cornerstone, which has just been fantastic with me since starting with them last year. And lenders like OSB, Ross is amazing with any sort of advice and help you need and always at the end of the phone. And it helps get then the right outcomes for clients. And regulated bridging isn't just for emergencies. It's, a good proactive tool when used well and with the right advice and a clear plan. It can empower clients to move with confidence rather than miss out on opportunities, which is Haydn explained with the client then that him and Ross helped. That would have been a missed opportunity for that lady when she was sat on all that equity and could have utilised it and did. So yeah, that's definitely something that every broker should look at.
Thank you, Jodie. And Ross, the last word to you. How would you advise brokers go about upskilling themselves in A, knowing about these products, and B, feeling confident to discuss bridging responsibly with their clients?
Yeah, definitely. I think with regulated bridging, I'd encourage brokers to speak to their local account managers at their regulated bridging lenders. I think with the regulated space, like Hayden's done, the creating of a panel of the bridging lenders, I think you'd be surprised how close all of those lenders work together. All the account managers know each other and work together. So there is quite a lot of support out there. So, for example, if you have a broker talking to one savings bank about a bridge and it's not one that we feel that we can look at for whatever reason, then we're all willing to say, look, not one for us because of this reason once we've spoken through, and then we'll guide you to another lender. And it works both ways. So I think there is a lot of support out there for people, especially if you're doing your first ever regulated bridge. And the second thing is I would always say to a broker, if you've not done a regulated bridge before, let the account manager at the lender know that you've not done it before and you need support on there. You need to know what the expectations of the lender are from submission to knowing the exit. But really, I think it goes back to what Jodie and Haydn said. I think it is the fact find bit from the client is understanding what scenario are they in at the moment, what do they want to achieve at the end of it, and what do they have in the background that those little nuggets of information might help us. Then as soon as you've got that, that's where I would just be picking the phone up to the lenders, and meeting with the account managers, going through those cases, And then we can sort of guide you through how the process works and what we need, and sort of the mechanisms of that case, really. But I think it's just, it's speaking to the client and getting as much detail as possible and understanding what that exit strategy is, really.
I think I just say, Jim, just before we finish, that the reason we've chosen the 9 lenders on our panel is because they've got fantastic field sales guys and ladies. The team of BDMs and account managers amongst the 9 are superb. They are receptive, as Ross has just said, to inquiries from people who are new to it, hugely supportive, and the collaboration between them is an example to all, I think, in the industry, really. So if it doesn't fit one, it'll fit one of the others, and they will happily advise on that. So I think that the message will be, try it. Yeah, do the training, raise any questions you've got with us at the network, but have a go and get it in your kit bag, because it really is essential moving forward, I think.
Jodie, did you want to come in there?
Yeah, I was going to say as well, for brokers, is to lean on other brokers as well. I think a lot of people see brokers as competition, but we can all help each other, and it's just a much nicer environment than if we're all, help each other. If someone's got that relationship with the client already, it's better to help them than let that client miss out on something. So I've had some fantastic support of other brokers within the Cornerstone network, and have supported others as well. So I think lean on other brokers too, if you haven't looked at it before or done bridging before, it's a really good help as well.
That's a great message to leave on. So a huge opportunity out there and plenty of support available. Thank you very much to my guests, to Haydn, to Ross and to Jodie, and thank you for listening to this Cornerstone Finance Group podcast.